Hello, everyone, and thank you for tuning in. We're going to take a few moments and talk about securities markets, specifically regulation of securities markets. So we're going to look at three laws, very important. Securities Act of 1933, Securities Exchange Act of 1934. Then later on, we've got the Securities Act Amendments of 1975. Main purpose of the acts are to protect investors from fraud and manipulation. So that's the key point. These were designed to protect investors from fraud and manipulation, from being manipulated. Now, when we talk about the Securities Act of 1933, it's dealing with new issues of securities. So everything except for bonds and bank stock sold in more than one state, they're registered with the SEC, Securities Exchange Commission. There's got to be a registration statement filed 20 days in advance of the sale, and that's got to include very detailed corporate information. And we've got the SEC. It doesn't certify fairness of price. It only certifies the information accuracy. So also, new securities, when they're issued, they have to be accompanied by a prospectus. And this gives information contained in the registration statement. And then officers and other people who prepare the prospectus or the registration statement, they can be sued if there's any discrepancies in that information in those items. Now, when we looked at the Securities Exchange Act of 1934, this deals with trading. So trading in securities markets, it gives guidelines for what is insider trading. It defines and it helps to prevent taking advantage of information for short-term gain. The Federal Reserve, the Board of Governors they're responsible for setting margin requirements and to determine the quantity of credit. It also prohibits investor conspiracies to manipulate securities, and it gives the SEC control over corporations' proxy procedures. And then the SEC requires certain reports to be filed periodically for regulation of companies in traded markets. So we've got quarterly, annual reports. And then all exchanges, so all securities exchanges, they've got to register with the SEC. Now, the last and final one, we've got the Securities Acts Amendments of 1975. So this directs the SEC to supervise the development of a national securities market. So we're looking at intermarket trading system, computerization. That's also prohibited fixed commissions on public transactions, also prohibiting financial institutions from buying stock exchange membership to save commission costs. Thank you very much.